The COVID effect lifted home prices by more than 25% year over year last spring from coast to coast, creating bidding wars in both cottage country and major urban centres. But one of Canada's largest real estate companies sees it shifting out of overdrive in the coming months.
We're moving out of that insane early part of the year into just what one might call a boisterous real estate market.
By Royal LePage's estimates, home prices will only climb 16% in the last quarter of this year, pushing the average price nationally to $771,000. The forecast is that this period of irrational exuberance has legs until the spring of 2022 before things settle down. Now, that doesn't mean home prices are expected to fall. Royal LePage sees a cooling, but the trend will still be higher because supply isn't keeping up with demand.
We've got this structural housing shortage in this country as our millennial population sets out and sets up their own homes and as new Canadians join the country.
The ultra-low borrowing rates that helped fuel the pandemic housing frenzy are coming to an end, too. The Bank of Canada now says its key rate could move as early as the second half of next year. Analysts suggest taking stock of your housing needs, assuming workplaces and schools reopen in the fall, whether that means moving or upgrading your home office.
If they need to make a renovation plan or they need to move, right now is the absolute best time to do it. Interest rates are low.
That means planning for the next phase, even though we're still partly in pandemic mode.
I believe that'll be one of the lasting legacies, is something of a reawakening of small town Canada. I think our major metropolitan areas will remain the creative hubs, the financial hubs.
And Gaviola, Global News, Toronto.